Hello everyone, I'm Rakhi Tanwar, Lead Analyst in Agriculture and Food Vertical at BIS Research. It is my honor to present to you today's webinar, Blockchain Technology Transforming Agriculture and Food Supply Chain. BIS Research has been tracking the agriculture and food market since the past 4 years. While several smart farming technologies have been introduced over the years, blockchain has stood out due to the combination of benefits it provides to the whole agricultural ecosystem. As the technology evolves with time and research, it is expected to not only make the supply chain efficient, but also add value to each stakeholder. Immense interest shown by professionals and students from organizations across the agriculture and food supply chain through registrations show the amount of potential everyone sees in blockchain. For today's discussion, we have got two experts of this field. We have our special guest speaker, Emma Weston, with us. Emma is the CEO and a co-founder of AgriDigital, one of Australia's leading emerging agriculture technology and financial technology companies. Emma has had a diverse career as a lawyer, agribusiness executive, and executive coach. She is mentor to several startups and founders in Australia and overseas. She was recently named as one of the Australia's top 25 fintech influencers and was awarded Female Fintech Leader of the Year and Emerging Fintech Leader of the Year for 2017 by Fintech Australia, as well as Female Fintech Leader of the Year at the 2017 Australian Fintech Awards. Also, we have with us Arvind Pal, BIS research analyst and a keen blockchain enthusiast. He has authored multiple market intelligence reports in agriculture and food research areas and has been widely commended by various industry opinion leaders for his incisive analysis and writing. I thank both the panelists for their gracious presence. A very warm welcome to both of you. In the next 20 minutes, we are all keen to learn from your experience about blockchain technology in agriculture and food industry. And towards the end of the discussion, I'll open the panel to the audience for any questions. You can type in the questions towards the end of the webinar, and any questions that we are not able to answer today shall be reverted offline. Having said that, let me open this panel for discussion and invite thoughts from Arvind Pal. Over to you, Arvind.
Thank you, Rakhi, for such a thoughtful introduction. I'd like to warmly welcome the audience and our esteemed guest speaker, Emma. Thank you for your valuable presence. In today's webinar, I'll cover a wide scope of the market for blockchain in agriculture. That will include what will drive the market, what will the stakeholders of the supply chain gain by blockchain's adoption, how will the market look like in the next 10 years, how supportive different countries are, and what will be the key applications. I'll then gladly hand over to Emma to discuss in the impact of blockchain on supply chain finance. Now, to begin with, I'd like to take you all through the major driving factors that BIS has outlined which will impact the adoption of blockchain in agri-food industry. Firstly, lack of transparency in the supply chain has been talked about as the core driving force behind the demand. Complexity in the supply chain has increased countless third-party middlemen, which has led to concerns such as unethical payments. Blockchain has the potential to provide end-to-end transparency and build trust based on a secure system for reliable data sharing. Second, we believe that the growing need for food safety will drive the market. Around 2 million deaths occur every year in the emerging countries due to foodborne illness. Also, around $10 to $15 billion are lost per year globally as the cost for food fraud. Many food companies are now investing in blockchain to avoid food recall and food frauds. For instance, Bureau Veritas in March 2018 introduced Origin, a food traceability blockchain solution, by collaborating with Worldline. In December 17, American retailer Walmart teamed up with IBM and China's Tsinghua University to develop a similar product. Thirdly, the need for efficient financial transactions in agriculture will prove to be a driving force for blockchain. Since the existing financial infrastructure suffers from record keeping and financial transactions, largely all financial institutions have initiated ventures into blockchain. For successful implementation of blockchain, all stakeholders of supply chain need to participate actively. Hence, in this segment, we'll discuss how blockchain will affect different stakeholders. Farmers are one of the most integral parts of the agri ecosystem, but usually they have the least access to end user customers. Blockchain would give them a new way to have an increased stake and have more ways to distribute their harvest. The increased transparency will also provide them with justified remuneration without unnecessary delay. This will also lead to an increase in their income. Global food producers such as Conagra and Campbell might be hesitant in jumping entirely on the blockchain bandwagon, but due to their legacy processes, which are already in practice. But they could approach blockchain by becoming part of a consortium such as Hyperledger or Food Trust while they develop a new workflow with blockchain. Distributors and retailers will face high impact of blockchain as they will have to modify certain aspects of their workflow to suit buyers' demand for traceability. They will also have to be more accountable for their products. Traders' contribution to blockchain will also be very high as they will have to be one of the first adopters of blockchain, which shall force the adoption of other stakeholders. They might not have to invest heavily as their current operating infrastructure is more in line with blockchain powered supply chain. Now we move to our next segment. Here we will introduce to you all how the market for blockchain in agriculture and food is expected to progress in the next 10 years. The plethora of benefits offered by blockchain, such as efficiency, cost effectiveness, and food safety, has prompted to companies such as AgriDigital, Bex360, Pavocoin, Ambrosis, and IBM to roll out blockchain software and platforms. Dynamic market activity shall drive the market to reach 1.4 billion in the next 10 years. In the next 5 years till the year 2023, the market shall initially be dominated by pilot projects from various startups such as KuChain, BlockRain, and GrainChain. Other stakeholders will also partner with these tech companies to experiment with blockchain's experience into their legacy infrastructure and workflow. In this 5-year phase, companies shall keep the pricing of the products and services affordable to motivate other stakeholders to join the team and the chain. Post 2023, we expect the global market to witness a large jump in the year-on-year growth. The growth rate shall be due to wide commercialization of blockchain by large agri-food giants such as Nestle, Danone, Unilever, traders like Louis Dreyfus, Cargill and CBH, and retailers like Walmart, Alibaba, JD.com. Post 2025, the global market is expected to witness a steady growth as the products will garner users steadily. During this, only companies are expected to sustain those business models which are based on solving a larger problem rather than those who push for just authenticity due to a blockchain product. Regionally, blockchain's adoption has been very fragmented, with no particular region having a uniform approach. North America generated the highest revenue in 2017, followed by Europe. The US dominated the blockchain innovation landscape due to large number of investments and pilot projects that were being tested in the country. Rising investments and growing number of startups in these regions will bring in more adoption. The regional early adopters can be traced in poultry, dairy, beef, aqua, and crop sectors. Companies are focusing on tracking the provenance of the products as well. For instance, October 17, Cargill launched a pilot project to enhance the traceability and track the product source of its honeysuckle white brand turkeys. Similarly, companies such as ArcNet, Louis Dreyfus, Carrefour, and Origin Trail have also been a keen innovator. Companies in the Asia Pacific countries have also been focusing on large-scale digitization of payment options through blockchain. In March 18, JD.com, a leading Chinese e-commerce site, adopted blockchain to guarantee the quality and provenance of the meat. Moreover, Chinese e-commerce giant Alibaba has collaborated with major Australia and New Zealand-based firms as well. While there has been a fragmented support across the globe until now, strong regulatory acceptance is promised in the next 10 years. Now let's discuss some of the key applications of blockchain in agri-food industry, where it will help reduce supply chain cost along with improving customer experience of food. BIS research has identified three most impactful applications, including supply chain tracking, finance management, and data management. The arrival of blockchain has been seen as very timely because of the rising demand for supply chain transparency and traceability. This has been motivated due to increasing number of food outbreaks and illness. A large focus of blockchain companies have majorly been on products for provenance and commodity traceability. This has made supply chain tracking application the highest adopted application. For instance, Project Provenance Limited, a UK-based company, has been working with suppliers to verify their claims of food authenticity since 2014. Similarly, Walmart completed multiple pilot projects along with IBM. Increasing number of companies such as Nestle, Walmart, Alibaba, Dole, and Golden State Foods are testing pilot projects in their legacy infrastructure. Data management has also become a major application of blockchain as the agri-food industry moves towards data-driven decision making. Blockchain is expected to motivate greater frequency in data sharing, especially from unstructured side of the supply chain, that is of farmers, because of lack of incentives which is offered to them. Although the market is expected to show lesser interest in selling products which are solely focused on data management, the presence of its elements in other applications will prevent it to lose its appeal and demand in the market. While other applications such as land and property ownership has witnessed initial adoption, finance management is expected to be the fastest growing application in the next 10 years. Market prevention in ag finance, mainly for payments, lending, borrowing, and insurance, is the major driving factor for this application. Smart contracts, crypto assets, and blockchain transactions are expected to disrupt the agriculture financing and payment industry. A significant contributor to the growth of this application has been AgriDigital, where they are continuously working on transforming the supply chain with digital trust among the stakeholders. Now, to discuss this further, I'd like to invite thoughts from our special guest speaker, Emma Weston. Hi, Emma. I'd like to hand it over to you now.
Thanks very much, Arvind, and thanks to everybody for joining in around the world, wherever you may be. Arvind's done a great job of setting up the context and giving some background as well as some crystal ball gazing as to where blockchain has come from and where it may be going over the next decade or so. For the next 5 minutes or 6 minutes before we open up for questions, I just wanted to do a little bit of a deep dive into what AgriDigital is doing, our particular use case, and one short case study. So at AgriDigital, we are involved in the trade, finance, and traceability of agri-commodities across the supply chain through both digitization as well as emerging technologies like blockchain. And for us, we look at supply chain and we see that it's failing. The problems are that farmers want to get paid for what they deliver when they deliver. They face transaction as well as payment insecurity on a large scale globally. We also have an issue where buyers of commodities need to have access to flexible forms of finance. And this is actually limited due to our inability as financiers to see through the supply chain to the underlying commodity or the underlying asset. And we're going to dig into that a bit deeper. And of course, consumers like you and me want to know where our food, our fuel, our fiber is coming from. We have an innate desire to make informed purchasing decisions. So the problem with supply chain is that it is made up of trade, finance, and data flows. And currently, whether it's an agricultural supply chain or other form of supply chain, those pipes of information all are operating independently of each other. So the solution is to bring them together into one platform or networked approach, whereby we have the ability to enact trade, to manage for inventory, to export, to import, to have an integrated payments approach, to have access to finance, and of course, to be able to contribute to and to serve up traceability data across the multi-participants who form our supply chains all the way. That's really the conception of the way AgriDigital builds out our commodity management platform and the way that we use blockchain. And we really see this as a supply chain that has embedded digital trust, of which blockchain is one tool in the toolkit, but a very important tool that seems to be emerging. What you have in front of you is a typical supply chain for wheat that is exported in containers. We've depicted it as a value circle rather than a supply chain, because we do think that with blockchain and the interoperability between participants, there is an opportunity to create more value than just the linear supply chain that we typically present and participate in today. So we might just think about blockchain in a slightly different way when we think about it from AgriDigital. We think about having 3 high-level use cases. I might just get you to move on, Arvind. Thank you. We think about the way that blockchain is implemented in global agricultural supply chain with 3 large use cases: transaction and payment security, network and market efficiency, and provenance and chain assurance. So that's really taking the problems that AgriDigital wants to solve for and thinking about blockchain from an implementation perspective as to how those problems form use cases. In the one that we're going to delve into, what you will see is there is actually some convergence of the major applications that Arvind introduced to us. In particular, when we look at finance, which we're going to delve into, you will see that finance is not possible if there is not some form of data management or supply chain tracking. So in fact, there is a convergence in a way of the applications or the use cases. Let's quickly go into one of the case studies that I wanted to introduce today. And although there has been a high degree of implementation or experimentation of blockchain for provenance-based use cases, the one I wanted to talk through with everyone today was actually more related to finance, which is one of the large emerging use cases as Arvind introduced to us. Last year, AgriDigital teamed up with Rabobank, the world's largest agricultural bank, to look at how supply chain finance would be deployed on-chain. So if you think about what supply chain finance is, in this particular case, what we were seeking to do was take a traditional structured inventory product that Rabobank has in market at the moment and to see how that would be made more optimal or more efficient if it were deployed in a chain environment. We were particularly interested in having visibility to the underlying asset and also looking at how we can ensure that payments get where they need to get to. So in a typical case, the farmer delivers in to the buyer, to the trader, and the trader requires finance in order to acquire that commodity. And so they go to the bank in order to get that finance. Now, this process of grower delivering in, buyer going to bank agreeing to fund, bank actually funding, taking an asset onto its balance sheet, providing funding to the buyer that then passes a portion of that funding back to the grower, can take anywhere up to 6 weeks. It also cannot be done on a load by load or a micro-transaction basis, if you like. So what normally happens is buyers need to aggregate many loads from many growers to take that to the bank in order to get finance. What we were seeking to do was to see whether we could create a structured inventory product that is just done on a load by load or just in time basis, and create a series of smart contracts to replicate existing financial structures and to settle the payments in the form of a stable coin, which Rabobank actually issued as a stable coin backed by themselves, pegged to the Australian dollar. So usually Rabobank would have, believe it or not, around about 136 sequential steps that they would be required to follow in order to execute this particular transaction. As I said, that could take up to 6 weeks. What we were able to do was to build out an orchestrating smart contract with a series of smart contracts underneath that enabled the grower to deliver to the buyer, and whilst on the weighbridge, to recognize that this particular asset that was being delivered in required finance, for that finance request through a drawdown to be made to Rabobank, for Rabobank to recognize that as valid because they could see the underlying asset and they could have visibility to the underlying asset, for them to make a payment which washed straight through the buyer and went directly to the grower, and for all of that to be done before the grower had left the driveway from the buyer. So instead of taking 136 sequential steps and 6 weeks to do, it was done in one atomic or simultaneous transaction and took 50 milliseconds. I've put out the tech specs and the high-level benefits there, but let's have a look at the benefits by participant of this type of approach. If we think about it from the grower's perspective, they now have flexible payment options that are secured to the underlying commodity. This enables them to think about marketing their commodity in different ways. They can participate in the supply chain in different ways. They're able to get immediate payment on delivery of the commodity. This therefore reduces the counterparty risk that they naturally participate in, as all growers do globally. Of course, what happens now is they deliver and they get paid sometime later, therefore being exposed to counterparty risk. Real-time payment on title transfer extinguishes this risk. We get improved liquidity, which enables better decision-making. The grower knows that they're able to access this cash, and therefore they can decide whether or not they want to market their grain at this time. And this means that they do not have to be just price takers in order to get access to cash flow, that they can now get cash flow just off the back of the underlying asset, where information can be made available to the financier. And there are also efficiencies that can be executed at the time of the point of sale. Often when the grower delivers in, there are third-party payments that need to be made at or around the same time. With blockchain, it's very easy to make these payments and to split up the whole payment into a series of sub-payments to be made out to government, to levy regulators, to royalty managers, whoever it may be. From a trader's perspective, they are operating in real time. They have a real-time position and they're able to take effective decision-making. Of course, they also have very simplified reconciliation. So part of the benefit of the data management side of blockchain is that there is immediate reconciliation of the position of the asset, the value of the asset, and the ownership and custodianship of the asset at all times across the ledger. And everyone who has the ability or the permission to see that asset is able to access that data and therefore reconcile their own position. What I'm really saying is there's a single version of the truth. The final point from the trader's perspective is an immutable chain of custody. It's very important in commodities businesses to know who owns an asset when and who holds an asset on behalf of an owner and where that is held. So this is a vital part of improving the visibility and transparency in supply chain. From a purchaser's perspective, and in this case, the purchaser was in fact the bank, there were enormous increased efficiencies in terms of back office. The ability to have a proof of ownership, so to be able to have a digital title record and to know that this title was an effective proof of ownership, was absolutely vital to being able to finance into areas that are not financed at the moment. Traditionally, banks will only finance into known and inspected warehouses and will not finance, for example, into private storages that are not auditable, and will also not finance to on-farm. The growing market, of course, is on-farm storage and private storage. The automation of the simplified structured inventory product itself was also a great saving. So The final point, of course, is that with an atomic transaction, we have pre-programmed a logic piece that is much more difficult to stop and to commit a fraud at any point in time. If you think about having 136 sequential steps in a transaction, the ability for there to be fraud or error at any point of those 136 steps is much more profound than it is in an atomic transaction. Arvind, I might just move on. To wrap up very quickly so that we can have some time for questions, I don't want to pretend that blockchain is a silver bullet and is a cure-all or doesn't come without challenges. As Arvind said, we are in the early adoption phase and implementation phase at the moment, and there are significant challenges that we still have to overcome. On the slide before you, you'll see that these are just some of the challenges that I see, and the way that we conceive of them in terms of the big bubble is ones that are really quite challenging, and we don't yet have a full understanding of how we will be overcoming these particular challenges, such as standards and interoperability, or the legislative and regulatory environment that impacts the implementation of technology or the output of a particular new technology. This can be contrasted with the smaller bubbles, which we think, or I think, are less of a challenge. For example, real-time payments. This, in fact, can be done right now. Of course, the acceptance of cryptocurrency as a means of settlement or crypto asset exchange is not necessarily there amongst the marketplace, but technically this is possible. And as we build out our understanding and the adoption of blockchain and of crypto assets more generally, this particular part of the puzzle has largely been solved for. So I might just wrap up by a very quick comment on the building of digital trust. We've spent a lot of time talking today about blockchain, the situational context for its development and adoption, and delving into one particular use case that we worked on at Agra Digital. However, what we're really aiming for is not implementation of blockchain per se. What we really are aiming for is digital trust in our supply chains. And so when we think about blockchain, we should think more broadly about what the ultimate game and end game is here, which is digital trust. So we need to not just address experimentation of blockchain, but also think about what are the applications that we'll be using. What does digital identity of people and things mean? For example, it's not just people who are actors in supply chains anymore, but things are actors. Weigh bridges, scales, quality testing instrumentation, all of these machines or things are providing us data and records that we are using in a chain environment. And we need to think about how we, one, can accept and understand their identity and accept and understand the data from that particular actor. We've spoken very briefly to digital currency. And of course, we've also highlighted the need for provenance and traceability. In order for there to be true provenance and traceability, we need to have manifestly a better data record and better data capture than what we have at the moment. But all of these things together really add up to digital trust. And that's really the ultimate aim that we have at AgriDigital when we look to de-risk supply chains from farmer through to consumer. I might just leave it there, Arvind. I think that my job now is to hand over to Raki, who's going to provide a brief wrap-up and perhaps to open up the panel to questions. Raki, over to you.
Thank you so much, Emma. Thank you, Arvind, for discussing blockchain technology's deployment in the agriculture and food industry so illustratively. After listening to you both, I can surely say that organizations in the agriculture and food industry will continue to unravel more and more opportunities in the coming years that will help them streamline the management of their supply chain, finance, data, and assets. And I believe that by the time blockchain in agriculture and food market reaches 1.4 billion in 2028, that we at BI's research forecast, the world would surely have achieved more trust within. With that thought, let me conclude today's session. And now I declare the forum open for any questions from the listeners. I request the listeners to kindly type in the question on the question box available on the right-hand side corner of your screen, and I'll be happy to pass the questions to the esteemed speakers today. So We have already received few questions here. So the first question is from Mr. Lance. He says that I have a new agriculture blockchain startup. How can I mold my product for it to sustain the next few years? Arvind, would you like to take this question up?
Sure, Rakhi. This is the question for the industry. Everyone is actually trying to find this out. If we actually had the answer for this, the companies would have been making millions. But I feel, as I mentioned through my content, that if a company is able to solve a large agricultural problem, rather than focusing on getting investment through blockchain hype, then they shall prevail. Probably products dealing with lack of transparency in supply chain, which leads to food outbreaks or food wastage or untimely payments, non-uniform insurance policies for farmers, etc. Probably a product that caters to a large problem in the agriculture industry will prevail. So I guess that's the answer that you can look forward to.
Thank you so much, Arvind. It was really insightful. Here's another question for Emma. Mr. Michael says, like, does AgriDigital see the combination of Internet of Things and blockchain viable?
I think the question there, Raki, was if the Internet of Things and blockchain, the implementation together is viable, and our views on that. Is that correct?
Yeah, right, correct.
Okay, yeah, thanks, Mr. Michael, for that question. There is no doubt that blockchain actually operates as an excellent convergence technology. And so in order for data verification, for example, to occur and for inputs to come into the blockchain, we need to depend upon other sources of data than just human input. And IoT is going to be a huge part, or Internet of Things is going to be a huge part of that particular data creation, data verification, and data inputting, direct inputting on chain. So I do think it's viable. We've been doing some really good experimentation in the area. What we are seeing, however, at the moment is we need to have a greater lift in some of the IoT hardware and the connectivity piece in order for us to be having reliable data coming into the chain. So there is still some way to go before we have complete confidence in the data that is coming from IoT sources, and also complete connectivity globally so that we can put IoT devices into packaging or into installations such as storage facilities, wherever they may be, and have everybody connected to a global supply chain. So I'll probably leave that question there, but I think it's a very
Thank you, Emma, for the information. I really appreciate it. We have another question here for Emma again. What kind of opportunity does AgriDigital see for itself in the US as we see expansion news of the company in that country?
Yeah, great question. The United States and Canada together, so North America, is the very next market that we're looking at from AgriDigital's perspective. So that's certainly very prescient from whoever has asked that question. The opportunities for AgriDigital at an application layer are very much solving transaction and pay chain efficiency at the agricultural end of the supply chain. So that is connecting farmers with buyers, with storage operators in ways that are digitized and therefore can be leveraged into environments like a blockchain. One of the big, I guess, issues that we face as an agricultural industry is that we are the least digitized industry in the world, and by quite a long way. And so if we do not put the efforts into digitization as a building block for digital trust, we will not be able to take advantage of technologies like blockchain. The immediate opportunities for blockchain that we are seeing in the US are very much along the lines that Arvind has indicated. There is a lot of work happening around provenance and supply chain tracking, and there are emerging supply chains that are actually being built out at the moment, which are closed groups of farmers, a closed group of storage operators and buyers, all the way through to the food system, who are looking to implement platform-based technologies across their closed-loop supply chain. There are also there's an emerging trend that I am seeing where food companies want to get closer to farmers, and that's not just a feel-good statement. They literally want to get financially closer. They want to be acquiring directly from farmers, but they've never actually done this before. So being able to connect participants across the supply chain who have not been connected in the past, who do not have relationships that are based on trust, this is actually where blockchain can come in and enshrine that trust in the technology. So there are some of the areas in which we will be participating. A final note on that is that in the United States and Canada in particular, one of the very large markets that is emerging is in the organic, non-GMO and specialty grains space. This is a double-digit growth market in the grains industry, and I think is very underserviced technically as well as financially. Therefore, we have demand outstripping supply, and that's an area we're very focused on in AgriDigital. Thank you for that question.
Thank you so much, Emma, for the detailed answer and covering all the aspects. Now we have run out of time. In the end, I would really like to thank Emma for joining us in the session. We have really learned a lot about the future of agriculture, supply chain, finance, and what AgriDigital promises to do in this regard. Also, thank you, Arvind, for sharing your insights about the market regulations, applications, regional adoption, and lots more. We have got a really overwhelming response through registrations and questions. With the help of Emma, an analyst at BIS, we would try to answer these questions and send it across via email. With this, I conclude today's webinar. Thank you everyone who attended, and I wish you all a wonderful week ahead. Thank you so much.
Thank you, Raki. Thank you, everyone.